Hello, and welcome to the stock specific class here for Thursday, April the 27th. If you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to Jerry at TradersPro.com. I may even just stop putting up the slide. I'm not getting many people asking questions, so save us a little bit of time at the beginning of class. All right. Obviously, the market's rebounding today, but I really want to see how the market closes because it's kind of a narrow rally. A lot of it has to do with Meta's earnings, and this is what happens during earnings season. You get the focus gets on one stock, one mega stock. Today, it's going to be all focused on Amazon's earnings. Tuesday it was Google and Microsoft, and the focus gets on these, and sometimes if the company is big enough and it has enough weighting within the index, it'll cause the index to move because of that one mega stock. And so that's why I talk about market breadth all the time. It's one thing I look at. Again, it's none of these things I talk about I base the entire decision on, but I look at them because they're clues, and when enough of these clues line up, you need to pay attention. And so again, the market's kind of flip-flopping a little bit here, and it'll be interesting to see if it was looking like it was declining. And really, when you look at some of the indexes, like the Russell 2000, it really looks like it's ultimately going lower. But today's move, again, if it finishes strong, we'll throw a little bit of a curve into the near-term picture. We might be flipping right back to looking more bullish, but this gets back to the argument that I've been making the whole month, which is that the market can't figure out where it wants to go, and what gets really frustrating is that both bulls and bears aren't making any money. If we flip flop and expect now the market's going to go higher, and then 2 days from now it reverses and comes right back down again, which it's been doing all month. Making that type of move where it's either just gone flat or just is not going in a direction, it starts to get really frustrating. And we keep looking at what's going to break it out of this mess. Is it the next jobs report? Is it the next CPI report? The next Fed meeting? And you look ahead. You've got two of those next week with the Fed meeting next Wednesday, and you got the jobs report next a week from tomorrow, the next Friday. And but again, that's been the problem: is all the focus gets on these events, and then it doesn't trigger the movement, or it triggers a one-day move, and then it fizzles out again. The market then looks forward to the next thing coming up. I mean, it was supposed to be earnings was going to be, okay, the earnings season, this is going to tell us what's going on, and it's been kind of whipsawing through earnings season as well. So these aren't ideal market conditions. It's one of those things that I've been frustrated with for really most of the last month, but been dealing with it for a few months now. Is the thing that's frustrating is it's out of your control. You can't move the market. You can't, and even when you think what's likely going to happen, a recession is probably going to happen, and some of these things are likely to happen, you still can't make the market move in the direction you think it should be moving in, and so you just have to wait it out. And the good news is that typically, if you put it in perspective, it's hard to do that because we've been dealing with it for, not even 3 months. It's been like 4 or 5 months that it's really been in this slog. Well, ever since the October lows, it's really been in this slog. And but if you put it in perspective, and I can do that here, we'll look at some charts. And we look at typically markets are moving, and that's what makes our job a lot easier. It makes profits more consistent. Ideally, you'd like to just stay out of these market conditions, but obviously, my job is to try to, for those that still want to trade, is to maneuver you through them as best we can, and try to stick to the best quality we can, and again, manage risk. And one of those things is keeping most of your money out of the market as best you can right now. And if you're going to trade with small amounts and with small risk, well-defined trading plans and things like that. All right, ironically, we've been watching this closely now for the last couple of weeks. We're getting real close now to switching from that bear market to bull market. In fact, if the market does rally for a few more days here next week, we probably will see that indicator flip into the bull market territory. And like I said, you don't get these signals moving or switching very often. So we will pay attention to that. As far as the momentum's in the middle part. Again, we're not stretched either way. It means we could rally from here based on this indicator. We could drop from here. We're not oversold in any way, so we could go in either direction. Same with market breadth. Now, one thing I will try to pay attention to here, because we saw this last time the market rallied a little bit, was we saw momentum take off and move into that extreme range, but the breadth lagged. It still stayed in this trending range. I think it barely got into the high range, meaning that it was basically saying don't trust that rally because there's not very many stocks that are participating in it. It's kind of an illusion, and sure enough, that played out to be the case, at least in that time frame. That rally fizzled out and rolled over and started to look like it was going to decline, and then now it's back to flip-flopping again. So, but we'll pay attention to that as well, because if it starts to rally and we're seeing the breadth lag again, that'll be a warning sign not to jump too strongly into that rally, that it may not last very long. And who knows, it could take off, and it could be just the opposite, where market breadth is right there with momentum, and we can maybe get into a few trades and take advantage of that. Sentiment is still really high. We talked about that. Buy-sell ratios, we did see the sells start to outpace the buys with the selling over the last couple of days. Now, remember, these indicators update overnight, so I would assume that this is going to level off a little bit if it holds. If the market does hold the rally into the close, you'll probably see sells tick down a little bit, buys tick up a little bit. But from an overbought, oversold standpoint, we're still not wide enough to where there's any sort of extreme level there. And then same with this sentiment indicator, we've come all the way down into the middle. We could see it tick up a little bit with today's market rally, but again, no extreme condition there to worry about. Let's get to the charts here. And what we were focused on Tuesday was that we did end up breaking below a key level. First of all, we had our resistance zone that we've been paying attention to, which is this area right through here. And again, we'll pay attention. We're right back underneath it. That's why I said I want to see how we close today, because we're right at the highs of the day. It's showing a pretty strong rally today. But again, this is where I can't grab onto anything right now, because this was yet Thursday or Tuesday we were talking. This was a strong bearish candle, and there was follow through to it. We did drop yesterday off of that. Here's a strong buy candle if it holds into the close. We should have another move up, but is it going to be one more move up and then we're right back to going down again? I mean, this has been the problem, is we've gotten these strong price action, but there hasn't been the follow through to that. Here was a strong candle right here. had followed through the next day, and then it came down a little bit and had a bearish candle, did drop a little bit there off of that, but then it's right back to bull candle. Here's a bearish candle followed by a bullish candle, but none of these are leading to movement. And before I go any further, I wanted to show you context. Let's back out and go to boy, I want to go out more than 2 years. Let's see if I can go a little bit further back. Let's go to like 2018 or something like that. Let's see if we can. So you can see, look at, and this is just going back a few years. You go back, this was the COVID drop, and obviously, that's something that's you're probably never going to see happen again. It was the quickest drop in stock market history, one of the biggest and steepest. There were no rally days within that drop. It was just straight down. But you go back before that. Again, movement. Here is movement. Here was a little bit of there was about a month or so where we corrected a little bit. It was a little bit choppy. Movement, though, after that, a little bit of a correction here, movement. And then all through this move, I mean, there were very, very short periods of time where we consolidated or moved sideways. But look at this freaking mess right here. And you're lucky I used the proper word for that for this class, because I want to use the other word for it. But this is not normal. In fact, it's easier for me to use my other chart here. I can go way back really quick here. I'm going to go, but this is a monthly chart, so this is going back several years. Let's just use the SPX. I don't have the main lines drawn. Again, we're going back years and years and years and years. And again, look at how normally we're getting movements up, and look at the movements down. They're even, they're clearly kind of going down. And actually, this drop right here wasn't too bad. I actually did pretty well with some bearish trades, trading options on that move down. But look at this right here. I mean, it's a long-term mess. We haven't seen anything like this for decades. So those of you that are starting out and you're new to trading and you're saying, boy, does this guy even know what he's talking about or know what he's doing? It seems like he's wrong every day or what have you. Give me a little bit of slack that we're dealing with conditions that we haven't dealt with for a very long time. I can't even remember the last time it was this bad. I've been trying to remember a period where it was this hard to forecast a direction, and again, we're just not getting we're not getting any follow through to these moves. I mean, you look at even just this context right here, this is since the beginning of the year, we haven't gone anywhere. We've been just in this sideways mess. So, and again, at some point it's going to end. But this is why, it's if you're really wanting to if you have money that you can't afford to lose, that you're trading with money you can't afford to lose, or you've got retirement money that you're trying to put to work, be very careful, or I would even say better to keep most of it in cash. Be very protective in these conditions, because this chop will just drain accounts. Like I said, it doesn't matter if you have a bullish outlook or a bearish outlook, you're not doing well right now. Now, are there ways to make money in sideways markets? With some types of option spread strategies you can, but they're very complex. if you don't know what you're doing. And really, you work twice as hard for half as much money. Nobody's making big money in these conditions. Now, again, I'm not trying to say that as an excuse, but it's I've kind of come to grips with just that's reality right now. It is the reality. All right, so now that I've depressed you, let's try to be a little bit more optimistic. Okay, so if this is, let me go back to our SPY chart here. Okay, so if this is turning into a bullish move, one thing. Let's go back to Tuesday. So this was a key area of support that we broke below. We closed below that. I didn't draw a very good line there. We closed below that on Tuesday. We dropped further down here, and really I didn't see any sort of support of where we could rally right here. There's nothing that I can look at to say, hey, there's a key support area right here that we could rally off of. And so that's what also makes me wonder why it's such a big reversal. And so again, I go back to, is it just meta? Is Amazon going to reverse it right back down tomorrow if it disappoints? Amazon's going to be important just because Amazon's really complex as far as how it may affect the market. There's different things that people are looking at, but it also is a very big consumer stock that could tell us, what the consumer's doing, and that may be. Anyway, I don't want to try to predict an earning announcement, and it really doesn't matter because it matters what the market does after that. So, looking forward, the next key, we're right back into this zone again. Then we want to see, do we break out of this resistance zone? We're right at it again. Do we move into it again, and then do we break out of it? The bottom line, this high right here, that was the February 2nd high, is going to be key. Although you could look at, we can't not right back up close to it here on the 18th. This area right here is going to be pretty important. Do we get back up there? Or do we break out above it? If we do, looking forward again, the next focus, I talked about this before, but we'll talk about again, this 430 area, 431 right here would be the target. And if we broke out of all this area right here, we should run straight up to that high. And then at that point, again, we reevaluate, see what's going on, and but that would be the normal path. But this is what's frustrating, is nothing normal. So basically, the reason what I'm saying here is that what we do as technical traders is we look at probabilities, and we focus on probabilities. And the purpose of showing you that long-term chart was to show you that the probabilities are that normally the market is moving in a direction, and when it's moving in a direction, we can use these clues I'm teaching you, ABC patterns, retracement levels, candle formations, all this stuff, and have a pretty good idea of where things are going. In fact, there are many times where I could be in these classes and it appears like I'm psychic, that I end up telling you exactly what ends up happening. It's happened many times in the class, and it's not me. It's just the norm. It's just identifying the technical clues that tell you the probabilities. The problem right now is that almost any lower probability move is happening, and it's just completely going against the normal cycle. And so you get to a point where it does damage, because then you don't trust the analysis. You don't trust the clues you're looking at. But it makes sense too when you back out and say that the market is we can see it sideways. We can see it's indecisive. it's telling us what it is. It's just, are we believing it? And this gets back to, should we be trading a ton in these conditions? Well, the condition, the chart is saying we shouldn't, with that whipsawing behavior. So heaven help us that this breaks out. And again, I don't care what direction it goes in. I'd prefer it pull back, just because it would set up for a much stronger rally and have a lot more confidence in a rally. But and it would make more sense as far as the macro conditions that we're seeing with the recession coming and things like that. But at this point, either way, if the market wanted to take off on a unusual rally that didn't make any sense, hey, I'd be all for that as well. The Dow, again, same thing, was rolling over, looking pretty sharp to the downside. Could this be an ABC pattern then? And then we're about to take off again. We'll find out. This had a declining trend line that I've been watching right through here. We did barely break above it right in this area here, but then kind of hovered right at it for a few days before breaking below it. Do we break above that? That's something I'll be watching next week. NASDAQ, this would look the most bullish out of the patterns, but again, it had broken back below, it broken out of that breakout area, which stocks can do. They can come back below that breakout area and then come right back up again. But the fact that it, again, it closed on the lows of the day, and this was the Microsoft earnings that held it up yesterday from going lower, and then obviously today it's moving higher. So again, this is probably the most bullish looking of the charts. But again, we want to pay attention to this area right here. Do we break out? Do we break out to a new high? That's something we'll be watching. Now, as far as the warning signals, the Russell 2000 is lagging, and it's even lagging for most of today. It was actually, it's come up a little bit now towards the highs today, but it was a kind of an indecision candle before we started class. And again, we'll see how that holds. But this one was probably my strongest argument that we were going lower, because we were I was looking at this as a potential bearish ABC pattern. I thought before that it could maybe come up here a little bit higher. But as we broke down, especially yesterday, we broke below this low right here. It really was looking like it's rolling over. And again, why is that significant? Because the Russell 2000 tends to be a leadership index. It tends to lead the way. In this case, it looks like it's leading the way down. I'll continue to watch that to see if it lags the rally on the rest. Now, this is not something, when we talk about leadership indexes, it doesn't mean that these are immediate things. These are going to be the primary things that we use for our decision making, because you can have divergences in these indexes for months. And so I would never say that the market has to go down because the Russell is underperforming the other indexes. But what it does tell me is that even if the NASDAQ and the S&P break out, it may not last very long. It could be, this could be an early warning sign not to trust that rally. Okay, unless it changes, unless suddenly the Russell starts catching up. Now, it's not just the Russell, though. You look at, skip over to the chip stocks, SMH. Look at the SMH is really underperforming today. Why isn't it up big with the NASDAQ being up big? It tends to be a leadership of the NASDAQ 100. The Dow transports tend to be a leadership of the Dow index. They have really, look at that drop that they've had the last few days. And yes, they're rallying a little bit today, but this chart is a lot more bearish looking than the Dow Industrials. So again, you start to see the conflicts here that we're dealing with, and I'm talking just strictly from technical standpoint. A lot of mixed signals coming out of these charts. All right, so I don't want to spend too much time on the other charts because we do that on Tuesdays, but bond market, down today. We're back down to testing these lows. We looked earlier like we were going to be back up to testing these highs. But again, we're seeing indecision in the bond market. And the bond market, a lot of times reason why a lot of traders look to the bond market is these tend to be more seasoned traders that trade bonds. Most people, they're looking for a part-time gig. They have their full-time job. They want to make a little bit extra money or learn another skill, and so they get in the stock market. You don't see them immediately jump into the bond market and start trading bonds. Usually that's a more seasoned, more professional type of trader, and doesn't mean that they're right all the time, but this is showing that indecision as well, that we're seeing the bond market not being able to figure out where it wants to go. Again, that's a red flag, and it's been doing that for, again, months. Okay. And so, the market is telling us it doesn't know where the hell it wants to go. And it's just a matter of, are we believing it or are we ignoring it? We should like it to make up its mind, and so we can do something about it. Gold had a little bit of a downturn yesterday, but it nice little bullish candle today. It's trying to hold this support area right here. This looks corrective, more sideways after this move up. I'm still pretty bullish on gold, and especially if we continue to see news coming from some of these regional banks, that's tended to lift gold and Bitcoin. It's been lifting Bitcoin too. Oil looked like it was trying to rally right here, dropped the last couple of days, although today's a little bit of a selling exhaustion type move, which, we call this a matching low, where it opened higher, tried to trade a little bit higher, but it might end up closing right where it closed yesterday. Now, that's not a bullish signal per se, but it is a sign of maybe some selling exhaustion. It can lead to maybe a bullish move. I think it's worth pointing out that it's happening near a support area right to here. We looked at this chart on Tuesday. Overall, oil's just been in the sideways range as well. Here's kind of the upper part of that range, but we're at the lower part of the range. Could we see oil rally back up to the upper part of the range? Now, remember too that this is the area right here where the government has talked about starting to buy oil to replenish the strategic petroleum reserve. Now, I told you before back here, don't make that the reason why you buy oil expecting that it's going to go straight back up because it's in this range. And sure enough, the first time it got back down to this range, it broke well below it. And there was no buying for the strategic oil reserve. It came right back up again. But that could be, we also heard rumblings that the government was upset that they missed that opportunity to start replenishing the oil reserves. I get it. From a political standpoint, there's no way they want oil prices to start going up in a big way going into an election year. But there again, they've got to replenish those reserves. There's a reason why we call it a strategic oil reserve. We need it when we need it. We need it when there's an emergency. And so there could be some efforts down here, especially the second time around, to maybe boost that up a little bit. We'll see. But I have liked a few oil stocks. We are also moving into the kind of the summer travel season, which tends to be more bullish for oil. Unfortunately, it also means our gas prices start going through the roof right at Memorial Day. But that could be, so seasonality plays into this as well. I did see a couple of oil stocks I'm going to point out today as part of the class. But you might want to see a little bit of confirmation of this holding its support for some of those trades. And actually those trades, there's a couple of them that would need confirmation. And so that fits in as well, that you could wait for that confirmation. We'll get to those here in just a second. The dollar, I think, is worth pointing out that it looks like it's flattening out here. It's starting to move more sideways. And I've been talking about this the last couple of weeks. We're looking for clues that maybe it starts moving up kind of the right side of a bull type move. Down a little bit today. It had a little bit of a bullish reversal candle yesterday, but there again, it's showing indecision. In fact, you can go back to the beginning of the year, and it's not showing a direction. It's just like everything else. Nothing wants to tell us what's going on or what's likely to happen next. And then the VIX came down pretty sharp today, which is not something I wanted to see, because it puts us right back to where, how much can we rally now? With the VIX now, we're already below 20. We never got above 20, even with the spike over the last couple of days. And now we're right back to moving down below 17 again, maybe down below 16. Again, it doesn't mean the market can't rally with the VIX down that low. This is not an exact indicator. This is not an exact thing we're using, but it's a headwind. It makes it very difficult for the market to go higher with complacency this low, especially in these conditions. But part of me understands why it's this low, because again, it's telling you what the indicator is doing is it's based off of those professional traders buying those protected puts, and when they have to buy them, the implied volatility goes up, meaning they're more expensive. Right now, their options are very cheap to buy it's because of I can see why, because we haven't broken out of the sideways range for so long. These professional traders don't want to spend that extra money to buy that protection. And so they haven't been, and it's getting worse. But the problem is that they don't need the protection till they need it. And when they need it, everybody's going to be going for it at the same time. And we're going to see a massive spike in the VIX, and probably a massive move down in the market at some point in time when you're in that condition. It's like you're paying your insurance on your house. That's usually a money that we hate spending, right? Because you never need it. And what if you just suddenly said, okay, I'm not going to pay that insurance anymore. I've never needed it. It's there's so many other things I could do with that. I could have a nice new car payment and have a nice new car for that money I'm putting into that. And then what if suddenly that there's a wildfire coming your way or what have you? Now you need it. The cost of it, if it was a market-driven prices for insurance would be through the roof to buy it at that point when you desperately need it. Actually, you probably couldn't get it because they know your house is about to get burned up and they're not going to cover it. The point is though, is that you're not going to need it until you need it, and when you need it, it's going to be a lot of emotion involved with that decision, and that's again hopefully you end up seeing the result of why I talk about this stuff, why I talk about it so often. Like I said, one of these days we're probably going to wake up and see the Dow down 2,000 points, and you're going to be staring at the TV screen saying, "What is going on here?" These are all little warning signs ahead of that cause that big of a drop. Is you start to see that emotion, that panic selling start to kick in, where everyone's trying to get out at the same time. All right, let's get into. So the bottom line is we're again, choppy market conditions, shouldn't be doing a whole lot. Keep that in mind as we go through some of these individual trades. Here's Bitcoin here starting to rally off of that little pullback. Let's start with the new buy list. So again, the purpose of this class is to give you patterns that I like, go through some of the sectors, go through some of the scans, there's always stocks that are outperforming the market, or that are moving opposite what the market's doing. And like I said, the safest place to be is probably on the sidelines. But if there is, something that you do want to get into something that's outperforming the market. The big plea, though, is to don't. I'm not suggesting getting into all these trades, okay, or putting too much money to work in these conditions. And that's why we spent all that time in the beginning talking about the market conditions before we get into the picks. In the new buy list here, though, I do like this TGS. By the way, this first one here, I think this is a buyout. Whenever you see this, so if you were like, man, I'm going to jump into this thing, look how big that move was. This is a great stock to get into. Well, the sign that this is a buyout was you have usually an unusual gap up. This is a very unusual gap up. And then it flatlines. It doesn't go anywhere after that. Okay. If you probably research this, there's probably a company that's acquiring this company, and they're probably acquiring it for somewhere around $24 a share, somewhere in that range there. So what they're doing here, when they acquire a company like this, what they're doing is they're saying, so you own the shares of the stock. There's a whole bunch of other people that own the shares of the stock. This company wants to have the controlling interest of those shares. If you have the controlling interest, you control the company, right? So how do they get you to sell to them? Well, they offer you a premium. They say, hey, we're willing to give you, your stock right now is worth $6 a share, $6.50 a share, and we're willing to give you 3-4 times that at $24 or $25 a share. Do you want to sell me your shares? Yeah, everyone's saying, here, take them, but they're not going to be any more than that, because unless another company comes in and says, hey, we're willing to give you $27 for your shares. That can happen sometimes. It's unusual for it to happen, but anyway, the bottom line is you don't want to buy into that, because it's not going to go anywhere. It's going to flatline like this. And so anytime you see a significant gap in a stock and you're looking to buy it, go do some research first to find out why it gapped. Because if you find out it gapped because of a acquisition, it's probably not going to go it's probably going to be stuck and pegged at that price and not going to go anywhere. You don't want to be buying it right there at that point. So I just want to point that out, because the software tries to eliminate these as much as it can, but it can't eliminate all of them. And so sometimes you'll see them on there. All right. I do like this TGS though, right here, the one right below it, 97 strength rank. And what I like about this was again, kind of an inverse head and shoulders formation. I love that type of a pattern. Now, again, you could wait. There's a little bit of resistance right up in here. You could wait for it to break out above that. There's a little bit of extra confirmation. Wouldn't be a bad idea in this market environment. If it does break out above that neckline right there, the rule of thumb on an inverse head and shoulders pattern is you can take the top from the neckline to the bottom of the head right here and project that distance upward. It gives you kind of a expectation of where that stock could go. Doesn't always go there. It goes there enough though to where we pay attention to it. Doesn't go there immediately necessarily, but it does. That's why we like this pattern. It's a very, very bullish type formation. You could also, and this happens a lot with inverse head and shoulders patterns, is they can often be created by coming out of larger ABC patterns. So you have this move up. This looks like a larger ABC, and then it started to take off. So in other words, you get that larger ABC, you get an impulsive move up off of that, and then you get that first correction, and that's what kind of creates that inverse head and shoulders pattern. And that's why it's a very bullish type formation. It's had its big correction right here. That looks like an ABC, larger ABC. had an impulsive move up, and it looks like it's kind of correcting right in through here. Now, it may not be done correcting, and that's why it might be worth, it could be that this is A, B, C, and it comes back down to line up with this area over here, and then it goes up. And that's why waiting for that confirmation, because if it comes all the way up here and breaks out, then this is not a wave B then. It's not A, B, and you're not going to get that wave C. It probably means that that's the correction and that it's ready to take off again. So this one I like, preferably with confirmation, although again, you could also, you want to start with a wide stop, just put a stop down below here. That's a pretty big risk though, or pretty wide area there. But you could get in with a stop down here. Again, take a look at the risk. Is it the risk, you're following the risk parameters. And then if it breaks out, you can move your stop immediately up into this area right into here. And now you close the gap. So there's different ways, there's aggressive and ways to trade. By the way, when I talk about confirmation, at some point you got to make a decision. So we could look at confirmation all day long. You could say, wait until it breaks above here, or it'd be even safer to wait until it breaks above here, but there's a price for all that confirmation. You're missing the move. There's a dollar cost for waiting for that extra confirmation. So there's no perfect decision to make, but that's what you're weighing. You're weighing, the risk versus the entry point. How risky is the entry point? How much confirmation do I need? That extra confirmation is going to cost me. How much is it worth to get that extra confirmation? You might say, boy, it's not worth it to get any more confirmation. Jerry, I think the stock's going up. I think you're full of it. I think the market's going higher, and I'm ignoring any other caution you're saying about another move down. Okay, then get in now. Maybe manage that with a wider stop that you're going to move up when you break out. And now you get that $2 move when it breaks out, and you don't miss it. So again, there's no perfect way to trade, but those are just some ideas of the process. And what happens is when you get confident in what you're doing, you have your own style, and your style may be based on conditions. A lot of times, when I'm really confident of a direction, I need very little confirmation. When I'm very cautious, like I am right now, I definitely wait for more confirmation and look for more confirmation. And I think that's the way it should be. It should be flexible that way, to where you're tailoring it to those market conditions. All right, the other one I like in the new buy is this, where is it? THRX, pharmaceutical company, 91 strength rank. And again, I like the pullback right here. It looks like it's, kind of formed a base right here, had a impulsive move up, and then it's corrected right through here. You look at a bigger picture of this. You almost had a larger cup formation right up through here. If that holds right there, that means you've got a higher low and you're working your way up the right side of the bowl, so to speak. And then in the near term, you have this impulsive up corrective, should go higher out of that. Now, this is one I may go ahead and add to the portfolio. What I'm planning on doing is just kind of similar to what I just talked about, is I'm going to put a stop down below here. Here's where I know I'm wrong. If it came right back down below there, stop me out. But the idea here is that if it breaks out above this range, then I'm going to move my stop up right below the bottom of that range. You've got all this support right in this area here, so that'd be a good spot to put it. And because I love the potential reward to risk here. It could work its way back up to these previous highs. Now, biotech stocks can be a roller coaster ride. We're not gonna have very much risk in there. In fact, I may even have. I usually try to stick to that 7 to 10,000 in the trade. I may be closer to that 7,000 on this one. And I'll explain why I might add something too when we get to the portfolio part. All right, let's go under sectors here. I talked about oil possibly finding a little bit of a bottom here or some support in this area here. Look for it. You might want to get a little bit of confirmation first. But there's a lot of oil stocks that are looking interesting. Here's one, CEIX, 94 strength rank. And again, it's one of those that looks like it could be forming that bull. Is that going to be a higher low right there? Now, again, a lot of resistance right here. This is probably a safer trade to wait for the breakout above here. But this is seasonality wise, this is also a pretty bullish time for coal. Usually, you say, well, is it winter more bullish for coal? That's not normally the case. Coal is used a lot for generating electricity. There's a lot of electrical plants are coal are fueled by coal, and obviously in the summertime, a lot more electricity is used in the summer than in the winter. Usually in the winter, natural gas is usually more that's used. The home heating oil that some of you that live in the eastern United States still have the home heating oil that is used. You don't use that in the summertime, at least as far as I know. But you can look back to go to a 2-year chart. You can see that typically, you can see here's the winter months right here. Coal kind of pulls back. You get into the spring, summer, takes off. Here was spring, summer right back here. Here was kind of the winter months. And so we're kind of moving back into that, and we're getting potentially that reversal formation. Now, again, I'd feel more comfortable if it could break out above here. But that's kind of the case for coal, and maybe all it does is rally back up to these highs again, but that's still a pretty good trade. It could do that. And if you wait for the breakout, you got a pretty well-defined place for your stop. You got the breakout. You could use that low right here as your stop. Or, like I said, if you don't want that extra confirmation, then get in now and use this as your stop. And then when it does break out, you move your stop up into here, or below that area right there where you have all that support right there. So another one under oil is Hess Corp, HES. And again, this looks like a little bit of an ABC pattern right here, bullish ABC pattern. You can also make the argument it's forming a little bit of an inverse head and shoulders pattern. I like the longer term chart. It's been holding this trend line right here. And so you got a nice clear channel. Oops, that's not a straight line at the end there, but if this is going back up again, it should run up to the top part of that channel. It's a nice trade here. And again, if you wanted to not wait for any confirmation or anything, you can try to get a stop down below here. There's a lot of support resistance in that area. If it dropped back below that, you're probably wrong. Or you could wait to wait for them, see if the market breaks out or something, or wait to get a little bit of confirmation that oil's done dropping. USO has a nice bullish candle or something like that, and then you can use that as confirmation. All right, and then another one that's pretty familiar to everybody is ExxonMobil 94 strength rank. Now there again, we're right up in this resistance area right here. It's been moving sideways. Can you wait a little bit for some confirmation to break out? Now this is one, if you're holding for the long term, you know, you don't mind so much if it has these periods where it moves sideways, because if this thing's paying a 3% dividend, you get some dividend income coming in as well. It's a pretty big dividend paying stock. All right. All right, going into business services. There's a few I like here. This LMB 99 strength rank, again, looks to be kind of completing an ABC pattern right here, kind of following this trend line. You'd want that trend line to hold. If it dips back below that trend line, and it could, I mean, it's a, you know, we don't know yet if this is an ABC. You know, you could wait for it to get up above this area right here, something like that, a little bit of confirmation. Now this one's been trending up for a little while, I think. This is one I was looking at, but yeah. So, you know, you have to realize with some of these, and this is why I like the ones that are just look like they're starting out, is that, you know, you could be near the end of this trend. Now it's still showing that it's acting like it still wants to go higher, at least as of right now. But that's where I would kind of focus on that trend line. You don't want it to break that trend line, because if it does, it'd be the first time in several months that it broke the trend line. You can extend that down even. But you know, if it does hold right here, then it should work towards the upper part of that range, and maybe that's what all you're trading is. You're trading this move right here, and that could be you could be in that trade for a few weeks or so, but that might be what you're trying to capture there. You're not trying to capture, you know, you missed a big part of the move, and who knows? I mean, you know, some of these stocks, they just keep going up and up and up for a long period. You think they've gone too far, and they just keep going higher. And you know, who are you to tell it how far it can go? You know. All right. I also like under business services. I liked the CLH. This is one that's really outperformed for a while. I've mentioned this one a few times before. Clean Harbors. Actually, let's look at a long-term chart of this one real quick. Let me back out and look at a 2-year chart. At a big consolidation area right through here. It's had a nice little move. And then if we look at the 6-month chart, it looks to be coming out of a little bit of a correction right through here. Maybe a little bit of an ABC. Nice little candle today. That's a chart that caught my eye. And then one more. Was this HURN, Huron Consulting, 96 strength rank. Again, nice little stair step move, up, step, again, pull back to the breakout area. Nice little candle right there. Looks like it wants to continue to go higher. Back out and look at a longer term chart. It's been a nice uptrend there for a while. I've had a cup formation right in through here. So again, you could take the top of the cup to the bottom of the cup. This thing could have some room to run still. So all right, real quickly here, portfolio, and then there's a question I'll get to. Gold and silver still look fine, at least last time I checked. Everything's changed since the beginning of class. That still looks fine. Silver still looks fine. Now, silver was based off of this little hammer formation. We did come open a little bit lower today, but that's a bullish candle right there. Bullish reversal candle right at a key support area. So, and our stop is down here a little bit lower. So we get, I think it's down below here. So we've given it, it's got some room, even if it did pull back a little bit further, but it's looking like it's getting ready to move up again. So that looks fine. Now the SOXS was the hedge. This is the inverse of the chip stocks. Now the chip stocks, you know, they were lagging a little bit today. I may hold on to this one for one more day. Again, I'm only using this as a hedge in case the market dropped, just because those Amazon earnings could be a big trigger for technologies for the NASDAQ 100. Does it flip flop right back again? If it goes higher again, then I'll immediately stop out of that tomorrow. But I was using that as a hedge and in case the market continued to drop. There's a few of these that I use. I'll use the SARK. That's inverse of the ARK Innovation Fund. And these allow me to make money when the market goes down without being short the market. And that's the benefit of, and we use this a lot during the bear market last year. And we didn't get aggressive with it, but it did allow us to make a little bit of money during that decline. And that's all you're usually trying to do in bear markets is just try to, you know, keep what you have, make a little bit of money if you can, but mostly keep what you have so you're ready to jump into the next bull market that comes around. I did say that I wanted to add one, and I'm going to add this THRX. And I'm going to put my stop. I'm going to start my stop down below here. So right about at $7. And then, like I said, if it breaks out of this range, then I'll move my stop up into this area right in here and immediately reduce that risk down. Okay. So let's add this. On here. I think it's time. I need to get a new laptop. I'm starting to see starts freezing up on me a little bit. I hate. You might be like this. I hate starting with new stuff. I hate a new phone. I hate a new computer. I'm very, well, this fits into what I do for a living. I'm very pattern oriented. I'm very, I like a routine, and I hate it when I have a new phone and I'm trying to figure out all the new stuff on it. I can't do the stuff I normally do, say with a computer, so I'm kind of putting it off, but I got to get one before this thing crashes, and then I'm really stuck. You'll be in class one day and this thing's going to blow up on me, and then so I need to go. I think I'm going to do that this week. Oh boy, why is it not letting me? Or maybe it's the site. Anyone else having trouble with the site right now? Let me try something else here. Try another web browser, see if that helps. If this doesn't work, then it's probably the site. There we go. All right. Stop price at 7. And all right, so I'm going to do 700 shares. That would put, ooh, no, it's not going to work. So it would be in the price range that I'm looking at, but the risk, if I get stopped out, I'd lose over $2,000, and that's I don't want that percentage of portfolio risk to be over 1.5. So there's either two things I can do. I can either move a stop up. Now let me look at that here, because I kind of rounded down to that 7. I looked at the low right through here, and it was the low was $7.12. So what if I do $7.10? Let's see if that makes much of a difference there. It may not make much, but so I'll put my stop at $7.10. See what that did, and a little bit closer, but so I'm going to have to do fewer shares. So let's do 500 shares. Okay, that'll work. That means we only have 5,000, and that doesn't bother me. I don't want to have a lot in this trade anyway. 5,000 to trade, only a little over 1% risk. Now I do have to be okay with that amount, because if I get stopped out, I'm going to lose $1,500. I'm fine with that, but I always bring this up that everyone has a different risk tolerance. I'm going to go ahead and go with this. Now, keep in mind that we're planning on lowering that gap, moving that stop up. And so what you could do, I'm going to go ahead and purchase this. What you could do is let's say it breaks out. You could move your stop up into here and then add those extra shares. And then now your stop is right here, and you have a smaller risk gap there, and you could buy, a few more shares or whatever. You could do something like that. I'm not, because I'm going to keep it kind of simple. I'll just stick to the original trade. But I just filled that up. There's an idea. If you're ever in a situation where the numbers are saying you got to buy fewer shares to keep the risk amounts right, then keep that in mind, that if you do get a move, then you can always add more shares, because now your risk is dropped, especially if you're moving your stop up. Moving your stop up, now you can buy more shares, and you've reduced that risk. All right. There was one stock you wanted me to take a look at, ARDX. Yeah, this was not too bad. I'd probably wait for a move higher, just because it did break this little trend line right here. It hasn't gone below this key support area, and you could make the argument this is an ABC pattern. But even as an ABC pattern, that'd be a real deep retracement of this move up right here. So if you can be patient, wait for a little bit of confirmation for it to break out above here, that'd be preferable. But overall, the trend is up. I mean, if you wanted to just say, no, I want to get in now, I'll put a stop right below here. Here's where I know I'm wrong. You could do something like that. Very tight stop, very aggressive entry. But yeah, it's not too bad. All right, I got to wrap things up. If you have any other questions, make sure you send those to Jerry at TradersPro.com. Have a great week. We'll see you next Tuesday for the next market update class. Bye, everyone.